Okay, let's get started. Hi guys, welcome for joining. Welcome to the live stream. Thank you for joining us. Tonight we're going to be talking about chart patterns. What patterns should you know, must you know to be able to get profitable trades? Okay, key patterns, key chart patterns for profitable trades. So it's one thing to be able to have a trading account, have some experience trading in the market, and be able to generate profits over the short term. Over the long run, you will see that your winning trades show a specific behavior. So this behavior is something that you can repeat, you can consistently find through patterns. They will more or less show you the same kind of patterns every time you are able to make a profit. And maybe you don't realize it, but it's actually a common situation when you make a prediction or trade in a specific direction. It is based off of a specific pattern. So patterns are helpful. It will help you find the same situation again and again, and that will enable you to make profits again and again. So that's why patterns are important. Hi Frank Mutiso, hi Wonder Nature, thank you for joining us. So although there are a lot of candlestick patterns out there, the patterns that I'm going to mention today are actually group of patterns. Okay, you have heard patterns like head and shoulders, double tops, double bottoms, wedge, triangles, channels, flags, and other candlestick patterns. So those are specific candlestick patterns. Okay, even things like engulfing bars, hammers, doji, and others. But the group of patterns that you need to be aware of to be able to find profit opportunities, there is a group called reversal and continuation patterns. Okay, so reversal, we'll talk about reversal patterns first. So all movements in the market, whatever asset that you are looking at, whether they are currency pairs, whether they are Bitcoin, crypto, whether they are commodities like gold, whether they are index assets, they are always moving between strength and weakness areas. Okay, they will move from a weak area to a stronger area. They will move from strong area to weak areas. So these areas are what we call the other way of describing them are support and resistance. Okay, so whenever you see an asset moving up, the chart is moving up, and it cannot go through past a certain level. It cannot break a certain level after moving up after some time. It will hit this thing called resistance. Okay, so the resistance level is going to block the asset from going any higher, and when that happens, you will tend to see a change in direction. The change in direction can be temporary, very short term, or the change in direction can be longer term, where it will be the new direction for the rest of the day. So that is more longer term. When that happens, when an asset is moving up and is blocked by a strong area, which we call resistance area, it changes direction. That movement is what we call reversal. Okay, that movement is what we call reversal. You must understand that some candlestick patterns fall into the reversal pattern description. Okay, so what are some of these patterns that are considered reversal patterns? Head and shoulders is a reversal pattern. Head and shoulders is where assets are moving up. Okay, assets are moving up. Let's see if I can find a reversal using head and shoulders on the asset we have on screen. That's a 15-minute, and let me go to candles. Okay, Let's look at what we have here. Okay, good. So we have Euro USD. Let me see if we have NZD USD, AUD USD. Nice. Okay. So we have AUD USD on the screen. Okay. So now let's find a head and shoulders pattern. Okay. You typically find a head and shoulders pattern when the asset is moving up and then it changes direction and starts to move down. Okay. So a head and shoulders pattern will have, okay, this is a bit slanted. You will have three tops, and the middle top, okay, it will go up, come down. That's the first top, and then from after coming down, it will go up again and form a bigger top, come down, and then it will go up again and form a smaller top, the third top, before moving all the way down. Okay, so that's a reversal pattern because of a resistance area, and you typically find three tops. Okay, now this is not strictly a head and shoulders, not strictly because it is slanted. Sometimes we are lucky we get a straight line to form, to touch all the bottoms of the peaks, and that is more clean. That will give us a clean visual of a head and shoulders. We don't see it on AUD USD. I wonder if we can get it on 30 minutes time frame. Let's have a look if we can get that visual on a 30 minutes time frame. Not quite, okay. So let's try Euro USD. The patterns are going to be the same because Euro USD and AUD USD are all against the dollar, and they typically behave in similar ways. Okay, so yeah, we don't have a head and shoulders right here. Okay, so basically it's three tops. Okay, one small top, the first one, second small top, the biggest one, and then after coming down from the biggest top, it will attempt to go up again, but this third and final top will not be able to match the height of the second and biggest top. So after reaching a third top, it will then come down and start to change direction and move downwards. Okay, so that's a head and shoulders pattern that is essentially a reversal pattern. Okay, so that reversal is a classic move because you don't see currency pairs moving up all the way throughout the day. You don't see a currency pair moving downwards all day. Okay, you will see currency pairs moving up and down, up and down. Although it's going up, you will see upwards movement and downwards movement. When it's going down, you will also see downwards movement as well as upward movement. And at certain levels, the asset will change direction. Okay, now when they change direction, now reversal pattern doesn't only work when the asset is moving up, it also works when the asset is moving down. So when the asset is moving down, lower and lower prices, reach lower and lower levels, it will reach a point where it cannot go any lower. It cannot go any further than the low that you have seen. Example is right here. We are seeing here, as an example, this is Euro USD. See, the asset is moving down all the way from this peak right here, which is around 106648. Okay, 106648. First, it tried to go higher. It couldn't. So there is a resistance or supply zone right here that's filled with orders, sell orders, pushing the asset down. So if there was any buy volume or people buying the assets and pushing the asset up, pushing Euro USD up, the sell orders will kick in and that volume will push assets down. Okay, somewhere along the line where you see all the red candles that come up after it failed to go any higher, as it goes down, what tends to happen is the buyers give up. So when the buyers give up, they turn into sellers. Why? Because they don't want to hold assets, they don't want to buy asset hoping for the prices to go up, but then it doesn't go up and instead goes lower. When it goes lower, it's creating losses for buyers. Okay, so they join the sellers. From buying, they turn into sellers. Okay, so they may exit the buy trade, they may let the buy trade turn into a loss, and they may open a new trade, and this is going to be a down trade or a sell trade. Okay, so together you have more and more people becoming sellers. Okay, when the volume or when the movement is too strong, even buyers who were confident of the asset moving up turn negative and join the sellers. Okay, they start selling. So this is why the downward movement happens, and you see there are still buyers trying to push things up, and this green candle with that tall shadow at the top, it was an attempt to push it higher. But again, this area up here is a supply zone full of orders waiting to sell. When it reaches that area, the orders start to come down and push down the assets again. Now we can confidently say that the number of sellers are greater, far greater than the number of buyers, because the green candle cannot sustain itself, so the body is pushed down all the way here, and then the next candle immediately turns red and goes lower than the opening price of the green candle, so the asset moves lower. So that's a reversal right here. The asset tries to go up, meets a resistance level, just a plain horizontal straight line resistance, that is able to create the change in direction. And this is what we call reversal pattern. You've got to be aware of it. Now, how do you confirm a reversal pattern? You see, when the assets reach this level, moving from a lower price to higher price, it also comes down. See, the asset moves up, comes down. When it comes down, it forms a support level. It won't go past that support level. So that's the new support level. And then it goes up again and then gets pushed down again. And then you have another support level right here. This support level is higher than this support level. Okay, so you see higher support, slightly, relatively small, but noticeable higher support. Now, we use that to determine the strength of this upwards movement. So as the asset is moving up, we look at the last or the final support level, which is around here, 10651. And for the asset to continue to go up, you expect the support level 10651 to stay or able to defend itself. If it is able to defend itself, it will be able to support the uptrend. Now, when the asset cannot pierce or cannot break the resistance line above this 10665 level and then starts to move down, then the confirmation that we need to be able to profit from the reversal pattern is, does the downtrend, does the new movement going down break the higher support level? So the higher support level we have from the uptrend is 10651, which is here. And as you can see, the downward movement, the change in direction after hitting the resistance and starts to move down, it broke the support level. So that is confirmation that reversal has happened and it is sustainable. So when it is sustainable, that trend will continue for a while. How long depends on your strategy. Okay, so since we are looking at a 15-minute time frame, okay, the chart that I have on screen is using a 15 minutes time frame. So you can open based on the number of 15-minute candles that you think will continue to go on pushing the asset going down. So I wouldn't be so confident before the asset broke the support level, but after it broke the support level, I would imagine as it came down from the resistance going down to break the support level, you can see that it took this asset, Euro USD, 1, 2, 3, 4, 5, 6. So on the 6th candle, on the 15 minutes time frame, it was able to break the support level. So I imagine this trend will continue for the next 3 or 4 candles. About half of the candle it took to push and break the support level. Now, it depends on your strategy. Maybe you are feeling a bit more confident, and you will want to use a smaller time frame. So maybe you will use only 2 candlesticks on the 15 minutes time frame. So when you open your trade, you open a 30-minute duration. Now, if you are not confident and think that the asset has to move even lower and that's going to take some time, if you're not confident with the move, the downward move, then you can open it slightly longer, but I wouldn't go anywhere more than the number of candles it took to go down. Okay, so it took 6 candles to break the support line, which is at 10651. So maximum I will open the trade duration 6 15-minute candles. Okay, so 6 15-minute candles is 90 minutes. Okay, so the duration I will use is 90 minutes maximum. Now normally I will look at the number of candles it takes to move and break that support level, and I will use probably around half or slightly more than half. Okay, that's my gauge or my measurement in terms of how long it's going to take in terms of number of candles to continue to move down. Try it out on your demo account, find a strategy that fits your risk management and trading plan, and then use it if you are making profits with some consistency. Okay, so head and shoulders is one of the reversal patterns. Okay, and I've shown you that we could use a simple horizontal resistance line or resistance level as well. Now the other pattern that you would find in the reversal pattern group is a double top. Okay, so a double top is easy to find because it only has 2 tops. So this could be a double top. Okay, one, and then you get another top right here. Okay, one top here, and then you have a flat, and then you have a second top. So the double top is a sign that the asset is facing resistance and cannot go higher. Okay, the opposite of that is called double bottom, and you can see that right here. So the asset comes down here, Euro USD, finds a bottom here and then moves up, comes down again, finds another bottom here and then moves up. Now as the asset, as you can see, as it formed that 2 bottoms, 1, 2, this part right here, you can draw a straight line and call that a neckline. So if the candles are able to go above the neckline of the double bottom, that's a signal that the asset is going to move higher and that it cannot go lower because it has made 2 attempts and failed to go lower. So when the asset cannot go any lower, that is an indication, that is a signal that there is a support level down there that's preventing the asset from going lower. Now, it's not enough for reversal for it to stop going lower. It needs to move in the other direction. That is why we use the neckline. So the neckline is right here. That straight line right there, you're going to watch that line at 10620. And when the candle pushes through the neckline and is able to stay above the neckline, that's signal confirmation that the reversal pattern has been proven and you can open your up trade based on a duration that you like. Okay, so for here, let's look at that number of candles it takes to break the neckline. So if the neckline is here and the candle moving up is from here, so I'm going to count the number of candles before it breaks the neckline. So 1 2 3 4 5 6 7 8 9 10 11. So the 11th candle is when it breaks the neckline and gets out of the double bottom formation. So I would probably open a trade with 5 or 6 candles on the 15 minutes time frame because I'm currently looking at the 15 minutes time frame. So 5 or 6 candles on the 15 minutes is around 90 minutes or 75 minutes, about an hour and 5 minutes. So that's the duration that I would use for the asset to move up. Now remember, that duration is dependent on the time frame that you're looking at. So if you're looking at 5 minutes, it's going to be a different calculation for duration. So if 5 minutes, 5 candles is 25 minutes. 6 candles on the 15 minutes time frame is 90 minutes duration. So be careful about that as well. Now let's look at the other group of chart patterns. Okay, the other group of chart patterns. The first one we were talking about reversal patterns. Now, what's the other group called? It's called continuation. It's called continuation. So what's continuation? Continuation is where the asset is moving in one direction and then shows that it stops moving in that direction. Now, when we say stops moving in that direction, it can move sideways, starts to move sideways, or it can even start to move lower, but it doesn't go lower forever. It is only showing a short-term movement to move lower before it continues to go up again and continue in the upwards direction again. So it maintains the uptrend if the asset is moving up, or if the continuation pattern is on a downtrend, so the asset would be moving down and then stops moving down for a while. Maybe because of a pullback, it moves up in a short term time frame, or it starts to move sideways. After a certain time, after a certain number of candles, it continues to move down. So that's continuation. Basically, it's moving in the direction that it was originally moving at. So you look at that situation and be ready for it. Okay, so let's find that on some charts and see if we can see some of this. And I'm going to use the 15 minutes time frame on AUD USD. So we're looking at AUD USD right here. Let's zoom out. Okay, sorry, that's not what I wanted to do. Okay, there you go. And we're looking at this and looking for continuation. Okay, so this is a good continuation example. See, the asset is moving down, and then instead of continuous straightaway continue to move lower, it stopped right here and then moved up for a while. Okay, so it stopped right here, and then you can see there's 1 2 3 4 5 6 7 8 candles where it stopped moving down and starts to even move up. Okay, but it didn't go up so high and reverse the downtrend. Okay, it did not reverse the downtrend. It only moved up a little bit and then continues to go down after that, even breaking the support level that was formed right here. So when it went to this level at 0.64545, you can see that the asset moved up, and we can see that there is a support level right there at 0.64545 or 546. Okay, and when the asset continues to move down, it would break that support level, and the asset is said to be continuing its original trend. So the original trend is the downtrend, and the continuation pattern is when you get confirmation that the trend did not reverse direction or did not change direction. Instead, it continues to go in the original direction. So that's really what we're looking at. And it didn't happen once. Look at the asset as it continues to move down. So this is AUD USD today on the 15 minutes time frame. It then starts to stop here at 0.64384 and then move sideways. See, it didn't go up, it moved sideways. And then you can see that there is a support line right here at 0.64376. Okay, 64376. And then when the asset starts to move down again, you need to be ready for continuation. So for continuation to be validated, for continuation to be proven, it must break the support at 64374. And it did. The asset moved down and broke that support line, and then you can see the next 4 or 5 candles continuing in the direction of the original trend. So that's a continuation pattern. And it's still continuing, it's still going on. See, the asset went down and then it starts to move in a sideways direction, but this time with a bigger swing. So it went up, down, up, down, up, down. So, but basically it is moving in a flat or sideways range. Okay, so there is a resistance at 64289, there's a support at 64091. Okay, And then right now, as we are seeing this, it starts to move down and break that support line. So really what's happening is AUD USD today is really negative, and I think we saw some weak China numbers, and Australia is dependent on China's economy doing well. It's they have huge trading volumes between the two countries, so weak China economic numbers will weaken AUD, the Aussie dollar. And then we also saw that there was some economic data over the last few days that showed the US economy is still going on strong. One data was a strong CPI. Okay, we got a strong CPI report, higher than expected this week. So that gives strength to the US dollar. So this is why you are saying AUD USD weak today. So when we see that there is explanation, or there is fundamentals driving the asset movement, you need to be ready for continuation. Okay, you can also be ready for reversal, but that might be a short trade. So open really short trades, don't open really long trades when the fundamentals are really pointing to Aussie dollar weakening against the USD. Okay, it applies to other assets as well. So that is why you, despite using technical analysis, you also need to pay attention to fundamental analysis and news. Okay, now so those are the two patterns: reversal patterns and continuation patterns. The fundamentals of both reversal and continuation patterns are support and resistance. Okay, now there are specific candlestick patterns that you want to pay attention to, like head and shoulders for resistance based reversals. You can also expect to see double tops when you see reversal pattern because of a resistance, and you would expect to see double bottoms when you see reversal coming from support levels. Okay, and continuation patterns can be marked by sideways trading. So be ready for sideways trading, because the next move outside of that sideways trading is going to be either continuation or reversal. So you got to be prepared for it. Okay, be ready for it, because if you are ready, you'll be the first to profit from that movement. Okay, now before I leave you guys, I do want to say that there are some important things that you need to remember, and that is confirmation, risk management, and context. Now we covered this a bit, but I just want to recap. Confirmation. It's important to get confirmation. Don't look at an asset changing direction as confirmation that a reversal is happening. As we can see when we talked about the continuation, the asset, when it gets out of that sideways trading, it needs to break a certain support or resistance. If it's going down, it needs to break the support level before you can confirm that that is a continuation pattern. You need to confirm it. Now, if the asset doesn't go down after sideways trading, it doesn't go down, instead it goes up. Now, that might be a reversal pattern, but it must first break the resistance level of the sideways trading. So if it's moving sideways, mark the resistance and be ready for the asset to move up after going down. Then that will be a reversal. But if it doesn't break that resistance level, then you don't have confirmation. Now, it's not good enough to be waiting for reversal or continuation. If you don't pay attention to confirmation, you do need confirmation, because there's a lot of movement in the market. Some of these moves are fake moves designed to catch weak traders. So use confirmation on a slightly high time frame, like 15 minutes or 30 minutes, and then open your trade. Get confirmation. Second, although we know that there are reversal and continuation patterns that you can use to make profits, be aware of risk management. Risk management is basically not betting the whole account in one trade. Okay, don't open, if you have $100 account, don't open $30 trades, because you can only make 3 trades. 3 mistakes and you are out. So don't do that. trade using small positions compared to your trading balance. So if you have a trading balance of $100, trade $2, make $2 trades, so that if you lose money from the trades that is wrong for whatever reason, you didn't read the chart correctly, or something happened, there was something news that came out, and you have to lose in a particular trade, that's okay, because when you lose $2 in a $100 account, you still have $98 to trade. You're not going to lose confidence if you just lose $2. But if you have a $100 account and you trade using $40, one loss is going to affect you psychologically. So risk management that we need to apply, one of the most important ones, one of the key risk management steps that you can take to protect yourself, your psychology, and your account balance, is trade using small positions, open small trades. And then if you increase your trading balance, then you can probably increase the size of your trade. But whilst you are starting, use small positions when you open trades. Now, finally, besides confirmation, besides risk management, you need to have context. Reversal and continuation sometimes are driven by context. As I mentioned, AUD USD, Aussie dollar, Australian dollar today is particularly weak because of some weak economic numbers that came out earlier today, and also strong numbers coming from the US economy. So that shows that relative between Australian dollar and US dollar, strength is going to the US dollar, okay? Because at first they thought that the US economy or the Federal Reserve are going to be able to cut interest rates in June. Now that they have high inflation numbers coming out this week, they are thinking, and a lot of traders are now expecting, the Fed will not cut interest rates in June, but in fact maybe will cut later in the year, maybe even at the end of the year. So if that happens, that means that the US dollar will remain strong because interest will still be very high. Okay, so understand the context. That will guide you to watch out for either reversal or continuation. So as we see that the AUD USD has been going down, and then you get strong news favoring the US dollar, then you want to be looking out for continuation. You might see some short-term reversals, but really what you want to trade is continuation of the AUD USD moving down, because the reversal will be very short-term, and then the next step after that will be continuation of the major trend, and the major trend is currently AUD USD getting weaker. Okay, so understand context as well. So there you go. That's what we have today. Key patterns for profitable trading. You will need to try this out in your demo account, get good at it, and then bring that over to your live account. And I hope you make a lot of winning trades this way. Remember, even good traders make mistakes, even good traders make losses. The point is to make more winning trades than losing trades over time. So give yourself a break. If you make 10 trades and you get 3 or 4 losses, that's actually normal. Try to get higher win rates every 10 trades you make. So every 10 trades, if you have been making 5 winning trades, aim for 6 winning trades next time, and so on. Okay, so I hope you've enjoyed it. If you have any questions whatsoever, put them down in the chat or comments, and take advantage of the promo code. Everything's on the description below for you to double your deposit when you deposit money into your trading account. Okay, so I will see you next time. Until then, take care. See you guys.